You are looking live at a daily chart of the Nasdaq, which had a little short cover rally today. You can see the volume is a 7% below the 50-day average, and usually short covering is lighter volume. And when institutions buy, we have heavy volume. We had this 22% rally and then the 16% correction. This is when we step on the gas here, and this is when we apply the brakes. The trend is lower. We had a counter trend rally with 3 or 4 follow-through days here. And now that the pullback here is completed to fill all these gaps that were in the chart. And today we just had a little inside day. So day one of an attempted rally, we're going to play by the rules here. The first possible follow-through day that we could have for a new rally would be Thursday. So we'll be counting down the days till Thursday, and if it rallies more than 1% on volume above the prior session, then we might have another one of these counter trend rallies here in September. Just got to stay flexible, keep an open mind, and the Nasdaq. This is where the growth stocks and the growth index is, and so this is the one that I pay attention to. Although we must also pay attention to the SPY, which was up today, but the volume here was at 25% below the average daily volume. That's why I say this is just a little bit of a short cover rally. The shorts have had a field day recently. Last week the SPY was down. It was up today, a little more than 1%, but last week it was down more than 4%. So 4 steps back and 1 step forward, that's not going to get you very far. So that doesn't look too good as well. They're all below their 50s. This is MDY. They're below their 50s. Simple moving averages and inside day today. This looks like short covering on the mid cap, and then the small cap Russell, same below the 50 inside day. The only one that's healthy above the moving average is the Dow Jones Industrial Average. I do want to go back to the Nasdaq here. And just show that it's still 3.8% below this 50 simple moving average. It'll get back above it. It's going to take some time, but eventually it will. It's not going to stay down there forever. It might take another trip to the 200 or retest this old low. You never know. Just take it one day at a time. September is typically a slow month for the Nasdaq, so just gonna have to be patient here and be flexible and keep an open mind. Okay, that's it for the indexes. I got to get to Apple because Apple had their event today, and normally it sells off when it has these events. And it had a new phone, pretty much the same pricing on the phones. 2 phones, 1,000, and then 1,200 for the Pro. They had the noise canceling ear pods, which now have hearing aids in them, and then they had a watch. So some new form factors for Apple with some AI components, but flat on the session's good, and then I guess up after hours. So that's okay for Apple. I mean, that's kind of what you expect when they have these new announcements. I didn't do anything with Apple today or NVIDIA. NVIDIA was down 14% last week. There you could see it down, $16.50, and it was down nearly 14%. So today it gets 3 back, 3.5. I can't get excited about that. Just a little inside day. Maybe that'll be the low for NVIDIA. Who knows? It looks like it wants to retest this old $90 here, and that's what I'm hoping for, so I can buy it there at $90. We're just gonna have to wait and see. Got to be patient. I'm not gonna jump in on these early morning, Monday morning spikes higher that we saw with a lot of stocks today. So it was still, to me, a defensive tape. Still a lot of these defensive names are doing well. This is the tobacco group, BTI. I mean, this is super defensive. Philip Morris and Altria, pretty defensive, above their moving averages. That group is doing well. And then, of course, the insurance group, AJG, which is Gallagher, which is on our leading stock list, trading right there around 300. We can see if it can blast through there this week, but above the moving average, is surfing. It's 10, like Kelly Slater. It's a Kelly Slater stock. PGR, Progressive. The ones with the cute advertisements just supported the 10. You know, these things look super strong. And then Travelers, this is a Dow Jones component breaking out of a base today. This is a you know, large cap, what, 50, what's the 55 billion market cap, and it broke out of this nice cup shaped base today, and just showing strength. So Travelers looks good. So anyway, one more insurance stock that I got to show that I normally don't is AON. Once again, got to go to the weekly here. This is a 76 billion market cap stock, and this one's just emerging from the base, right? Still, that looks like it's still actionable on the weekly. You know, on the daily, it's just pushing away from that base. So that one looks pretty good as well. You know, it's defensive. This is a defensive tape. So I'm going to show you defensive stocks. GD, I say gosh darn it, but it's GD, General Dynamics. Nothing to be gosh darning about, up 3% today. I did have this one on my ready list. I didn't buy it, no, but you know, this is the type of tape that we're in, a rotation out of the technology stocks and into more, you know, defense names. And it's been this way since, you know, the Fed has indicated that they're going to lower rates. So this is healthy longer term as we rotate into other groups. So, you know, everybody gets a turn at the table here. And Lockheed Martin is another one, LMT, looking fantastic. Northrop Grumman, another one of these defense names, looks good. HEI. These all look fantastic. You know, Raytheon or RTX. Yeah, I mean, above the moving averages, looks fantastic. Just real strong stocks. Also, with the rates coming down, you're seeing these home builders doing well. Pulte Homes above the moving averages. DR Horton looks fantastic. Lennar, same, looks great. Toll Brothers, more of a luxury home. Probably their clientele probably pays cash, you know, for these $3-4 million homes or higher. But Toll Brothers looks good as well. So just real defensive in nature, you know, the insurance, defense stocks, tobacco, home builders, and of course, we can't forget about the power stocks. These data centers are going to need power, and these utility stocks have been doing fantastic. That's WEC Energy. This is Con Ed doing fantastic. DUK, Duke Energy, another one that's just doing well. And then NEE, Next Era Energy. This one's just surfing its moving averages, pushing away from the base, looking fine. Let me see. Okay, and I did mention you know, more defense. These REITs are defensive. Welltower making new highs. These are connected to the healthcare and housing facilities where, you know, the kids are putting their boomer parents in these living facilities. I hope I don't have to go there one day, but eventually, you know, we all have to go. American Healthcare REIT, that one looks strong as well. I mean, these are looking fantastic. There's, you know, senior living healthcare related REITs, 47 states and Washington, D.C. This is Ventas, VTR, and this looks fantastic as well. See the big volume. Let's see what that looks like on the weekly. Yeah, all the big weeks are on these big blue bars. That looks fantastic. VTR out of Chicago. All right. So that's about as defensive as we can get. I'm going to look around at some of the software names, because software is hit and miss, a lot of miss, but there's some that are hitting. This is Tyler Technologies. They have a big facility here in the Phoenix area, which I drive by quite often. I don't know what goes on inside there, but the stock looks pretty decent. You can see it's got IT management software for schools, government entities. So they have money, schools and government, for their IT programs. Another one in the software. Oh, I've got to get to the, you know, Palantir was included in the S&P 500. That's not a real good excuse to buy a stock. Usually when companies go into the S&P, they don't do very well. I showed you Deckers and SMCI, the last two that went in, and it just tanked. Decker's doing much better than SMCI, but historically, once they go into that index, they don't do that well. So Palantir had a nice spike today. Then IoT, Samsara, they had a earnings report last week, gapped higher on Friday, which was a miserable day. after that jobs report. Yeah, this was up 13% today, makes a new high. So another software name that's holding up, doing well, making new highs. We like new highs. I got to get to some of the drug names because they were in the news today. Summit Therapeutics had positive news today, and obviously it was up 56%. So that's a move not to be ignored. HLN is another one that's been just doing fantastic, making new highs. If you look at this on the weekly, it's a medical generic drug. You can see this consolidation just to move higher. Geez, every week it seems like it goes higher. And then ABBV, and this is a larger cap stock, 347 billion market cap. It's supported by its moving averages. That one looks good as well. PTGX, I don't know if this had news today or not, but it was up nearly 8%, which is a nice move. And then ALGS, big mover today in the drug names, popping, making a 56% move. Thank you very much. So anyway, some of the medical names are doing well. Also, this is Cooper, broke out of a base and now trading higher. Let's see what that looks like on the weekly. Yeah, nice double bottom base there, trending higher. Cooper looks fantastic. What other ones? Oh, ResMed, RMD. This is supposedly going to get hit by the weight loss drugs because it's a sleep apnea, disorder, and this has not been affected by the Eli Lilly and Novo having their drugs approved for sleep apnea, but this one keeps rolling and looks pretty darn good. Boston Scientific, yeah, making new highs. We like that. And then STE, Steris, Medical Systems Equipment Company, based in Ireland. So they're avoiding taxes and making new highs today. So that's another group that looks pretty darn decent. And anyway, let me see. I've just got to get to a couple things. One, Oracle reported after the bell today, and they had deals with Google. Oh my God, 151, very nice. Shorts are getting blown up here. Yeah, deals with Google and Amazon. So congrats to the Oracle longs there. That looks good, and that'll bode well for the Nasdaq tomorrow. This is a 385 billion market cap stock. It's a big kahuna. And so that's good news that Oracle's responding well to their earnings report. And then I just got to get to, this business of rebalancing. These stocks that I'm showing you here are all going into different indexes. This one, I think the, what is it? The mid cap 400, what's its market cap? Yeah, 13 billion. So this morning you look at it and these things are just ramping, right? The first, half hour it's up. Man, it's going crazy because it closed on Friday, $10? Right around $10, right? $10.07. And then this morning it's up to $10.77. So 70-cent move. And then what happens? Gosh, they just pull the rug on you all darn day. So these retail folks were chasing this first half hour move. They got suckered in, and then it closed at 26% of its daily range. You could see that there as it closed near the lows. See, closing range 26%. So you don't want to be jumping in these Monday morning spikes just on rebalancing news. That's a sucker's play. WAL is another one. This bank stock went into the another mid cap. I believe it's the mid cap. 400, I believe. Anyway, it's just rebalancing. You can see this one spiked, and then all of a sudden just a rug pull. And a lot of these did the same thing today. TGTX, big move higher, 24.50. An hour later it's at 22.80. So you get suckered into these if you chase this crap. ADMA, same thing. Big spike the first half hour, sold off the rest of the day. I saw people jumping on these things. This is just an avoid here. Sell these spikes or just stay away from one or the other, but don't participate and try to get in long. Parson, software name spiked, sold off. You can see this VNOM, oil and gas play, big spike, big sell off. I mean, what's the daily range here on this one? 9% of its daily range. So yeah, it ran up to 49.37, closed at 46.87. So you have to know this. You don't chase these Monday morning spikes. especially just on rebalancing. This is really stupid. Indexes are forced to buy them, and then they could sell them at any time. And typically they don't do that well after they enter these indexes. So anyway, that's a 10-minute chart. There's a 5-minute chart in Inspire Medical Systems. Yeah, up to 225, close it to 11. No, thank you. And then DELL, of course. DELL, rallied at the open and then sold off all day. What was the daily range on DELL? That looks horrible. Below it's 200. Yeah, I don't think anybody's excited about buying DELL, below the 200 there. At any rate, thank you for watching at mcstockcharts.com. We never give up, except for in honor of the great Steve Jobs. I'm not going to talk about the iPhone or the watch or the pods. I want to talk about growth stocks, because when you buy these growth stocks, for the most part, they're time bombs. Very few stocks are like Apple and Amazon and Google that have staying power for years and years and years. You could just hold them, collect dividends. Those are the rare ones, the NVIDIAs of the world, even AMD. Most of them are like Celsius. They have a little, and Peloton, they have a shelf life. And this one had a nice run for a long time. This is Celsius. And you could see it had this nice ascending, and then what happened? It just went sideways for a long time. Had a top, and now it's in a stage 4 decline. Okay, and we're seeing the same thing here with ELF, which had this very pronounced, stage 1 base, and then stage 2 ascending pattern, stage 3. It just cannot make make new highs. Now it's in a stage 4 decline, and these things can go down for a long, long, long time. They could go really low. I got to show you ROKU, because this is one that I had back when it was $490, back in 2021. Here, it looked like it was a nice cup with handle pattern there. Looked like it was going to break above 500, and then what happened? It sliced its 50. Adios muchachos for me. I mean, I sold there about, I don't know what it was, 480 or something. But you could see the decline, the stage 4 decline. You don't want to hold this stuff. You don't want to marry these stocks. You're renting them. They're growth stocks. Now it's trying to break out of a stage 1 base and having a hard time with its moving average of trying to get above the 200. And it's just wallowing here. So don't hold on to these things. They're growth stocks. When you're, a trend trader with growth stocks, you can make a lot of money in a short period of time, but don't hold on to these things hoping that they're going to come back to former glory. SMCI was one that went into the S&P 500 earlier in the year in March. And, you could see if I go to the weekly, you can see this one has a real pronounced, stage 1, stage 2, thank you, stage 3. And now it's in a stage 4 decline. And I don't know, it could come back to, well, they're going to split, right? So maybe they'll come back to $35, $30, back to this old area, form a base and make another run eventually if, the data centers continue to show growth. But you don't want to hold on to this hoping it's going to go back. You want to hold it from 350 to 1,000. That's great, but you don't want to hold it from 1,200 down to 400. No, thank you. That's too much pain. So I just wanted to show you that some of these companies, they're left for dead, and then they come back. They're resurrected like Lazarus. This is Carvana, left for dead. It had a miserable bear market. I don't know, what was it at? It was at 376, and then during the bear market, it got down to what, $3, and now it's on this ascent, right? It's on this stage 2, ascending, trajectory. But eventually, it'll do the same thing and do this. It'll stop growing, and then it'll do this again. But right now, it's just in stage 2, so. Maybe this will be a stage 3 area here. 159 was the high here. It's got to get back above it. It's below the 50, but the growth stocks have been hammered here in the middle of August and September since, like I said, Jerome Powell, indicated that they're lowering rates. The market has changed. There's other stocks doing well, and these growth stocks are just they're out of favor. And until they come back into favor, you kind of have to stay away from them. But I just wanted to show you that don't hang on to stuff like Celsius and ELF. And I got to show you there, because there's these groups, this group right here, this is fixed. The air conditioning, I'd be very wary of this one because you could see how in the past, how tight it traded, these tight little bases. You know, I had this thing back when it was like 150, and see how these consolidation, this flat base, real tight trading, the daily range, just a few bucks, right? And now it starts getting wide and loose. You can see these daily bars, just massive. And that just shows you that there's indecision. Institutions don't really know what to pay for these things. And you got these big, massive bars. Yeah, 304 to 272. You know, it's a $32 bar. The other day it had this massive bar of 352 to 314. I mean, that's too wide and too loose. It's an indication that institutions don't know what to pay for it. And usually that's a bad sign that it's going to be on the way down. You can see the same thing with ELF, tight trading, got up to this base, and this base is a lot wider, a lot looser. The average daily, bar is twice as what it was back here when it was consolidating in prior bases. And then we know what happened to ELF. People don't want ELF anymore. Like I said, these things are like hand grenades. You don't want them going off in your hand, so you have to get rid of them. I use the 50 to get rid of stocks, but you could certainly use the 21, because a lot of times when growth stocks slice their 21, they go down to their 50 and slice their 50, and it's adios muchachos from there. So if you want to be early, use the 21. And anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up. Tomorrow's another day.